Hello all and welcome back. I hope everyone is doing really well. This is going to be one of a couple of different dedicated videos looking specifically at the SaucerSwap v2 launch, which of course sees a protocol inclusion of a CLMM or concentrated liquidity market maker protocol alongside SaucerSwap v1's protocol, which is AMM or an automated market maker. This video is going to be looking at the intricacies of SaucerSwap v2, what we can expect, and then later videos themselves will be actual videos demonstrating how to use the platform directly or how to use the v2 protocol directly to create some different strategies, etc., because it does bring some really awesome features. Before I read through the new SaucerSwap v2 documentation, of course, links will be left down in the description. I will preface this as well to say that, of course, SaucerSwap v2 isn't live just yet, and the public beta will be going live on the 28th of October. And that is, of course, when I will then be releasing a video looking at how to actually use the different features. And I urge you guys to play around with that as well yourselves on the testnet. First thing I wanted to answer and address, though, is one of the questions I keep seeing is, what do I do with my existing SaucerSwap v1 positions? And the great thing to say about this SaucerSwap v2 launch itself is that it's going to be launching directly alongside SaucerSwap v1. That means inherently SaucerSwap v1 will continue to exist at the same time we have SaucerSwap v2. Now, there could be several different reasons why you may not choose to migrate your position from SaucerSwap v1 into a v2 pool. The first one could be because of simplicity. You're a creature of habit. You've already got your liquidity positions set within those particular farms, and you just want to set and forget and leave it as it is, and that's perfectly fine. The second one as well may be that you do not want to exit any of your positions in your SaucerSwap v1 pool because you're suffering from impermanent loss, and you want to wait for a more advantageous time to move across to v2. So there's a couple of different reasons there as to why you may not want to migrate your liquidity immediately, and of course that comes down to personal preference. Right then, looking at these docs directly, SaucerSwap, of course, being the pioneering DEX on Hedera, have launched their v2 documentation to effectively summarize a little bit more about what we're going to be seeing over the coming weeks as we gear up for this particular launch. Some background information here, of course, about SaucerSwap Labs directly, being a Florida limited liability company, developed the SaucerSwap protocol along with the interface, suite of persistent, non-upgradable and open source smart contracts, of course, being fully open source. And we saw some of the other smart contracts based decentralized exchanges using that open source code themselves when building out their interfaces. SaucerSwap protocol integrates with the Hedera token service achieved by modifying Uniswap smart contracts and interacting with the Hedera smart contract service through EVM precompiles. So a little bit different than just a straight up fork, because of course they're integrating directly with those two native services to Hedera alongside those Solidity based smart contracts via the EVM that is available. This allows for that rapid throughput, fast transaction times, as well as benefits of low-cost US dollar denominated fee structures, which of course Hedera natively has. SaucerSwap 1 then is based on the Uniswap v2 constant product AMM, which enables anyone to deposit equal value of two HTS tokens, i.e. Hedera-based tokens, into a liquidity protocol. I'm sure many of you are familiar. If you aren't familiar with AMMs, I do have a dedicated video looking at SaucerSwap v1 and how to provide liquidity, etc., the benefits and drawbacks of liquidity farming and what effectively you're doing when you're supplying these two different tokens. I'll leave that link down in the description. I did that quite a while ago. But of course, we're looking at AMMs versus CLMMs. However, of course, for context, we can see here in the documentation, when a user makes a trade in this liquidity pool, the quantities of both of those tokens change, but their product remains consistent. This mechanism automatically adjusts the price of tokens based on supply and demand without requiring a centralized order book or intermediary. The constant product formula XY equals K offers immediate settlement at a price determined by a ratio of tokens reserved in the pool. Effectively, we see algorithmic changes to the pool based on supply and demand. Nothing new here. SaucerSwap v2, though, will build upon those principles of Uniswap's v3 concentrated liquidity AMM, allowing those liquidity providers to now specify custom price ranges, if you wish to do so, for your HBAR and HTS token pair. Individual positions are then aggregated again into a single pool, forming a composite curve for users to trade against. The outcome is heightened capital efficiency, which we've looked at before, and I did several different infographics, up to 4,000 times in terms of capital efficiency, as well as things like reduced slippage on trade execution compared to those V1 protocols. A multi-tiered fee structure is also introduced in V2, allowing liquidity providers such as yourselves to be appropriately compensated for taking on those varying degrees of risk. So effectively, we can now begin to build different risk strategies based on the liquidity that you're actually providing. You can either go more risky and earn a higher yield from those fees, or you can go slightly more conservative and less risky, and of course be compensated accordingly for taking on that lower risk. Naturally, there are unique advantages of Hedera and things like CLMMs, HTS standards. So unlike ERC20 tokens, which are just smart contracts, HTS tokens operate as a native entity within Hedera. These tokens offer high throughput, low fees, compliance configurations, and native on-chain programmability using API calls for atomic swaps and configuration of custom fees. Of course, we've got cost efficiency as well, again from those fixed denominated US dollar fee structures. Performance, transactions on SaucerSwap achieve the same finality as Hedera natively, which is around 3 to 5 seconds. MEV resistance, which is a major one. Hedera's hashgraph consensus algorithm, which uses gossip about gossip and virtual voting, effectively nullifies the threat of maximal extractable value, or MEV. This guarantees fair transaction ordering and negates front-running risks. Now, anyone that's been around for a while will know about front-running on chains such as the Binance Smart Chain and things like Ethereum. It's a complete nightmare when we start seeing things like large-scale mints or sort of meme tokens, etc. And Hedera effectively front-running is not possible due to this MEV resistance, which is a major factor in probably helping to produce a very, very high standard decentralized finance ecosystem that is currently being built. Liquidity aligned rewards initiatives as well. 𝗟𝗚𝗡 is the nickname. This feature incentivizes those liquidity providers by aligning rewards to the efficiency of the liquidity provided. Rewards, of course, may be distributed in HBAR or any other HTS tokens. User friendliness, the SaucerSwap UX design, of course, is very, very good, and they keep making minor improvements over time to make sure it's straightforward. HBAR Foundation support, they do have backing from the HBAR Foundation themselves, and they aim for that long-term sustainability and development. A few other things here as well, fee switch mechanisms and yield enhancements. Of course, all good stuff. Some key stats though, as of October 2023, SaucerSwap holds a majority market share among the Hedera DeFi protocols, $29 million of TVL, $200 million HBAR, being the wrapped HBAR contract balances, around $500,000 or $500,000 in average daily trading volume. We've got a cumulative trading volume or total effectively of $220 million that have gone through SaucerSwap's platform, cumulative swap events at 1.6 million, and over $660,000 of fees being generated. Of course, they're approximate measures, but they do serve as key performance indicators, highlighting the protocol's market presence. And I'm sure all of you watching this video are fully aware of the prevalence of SaucerSwap, and of course, them being the pioneering DEX and price oracle of the Hedera ecosystem has generated a hell of a lot of credence behind what they have built and continue to build. So taking a really quick look at what a concentrated liquidity market maker is in contrast to an AMM, and one of the key advantages is summed up actually very, very succinctly in this CoinMarketCap article. Of course, I'll leave this link down below. So for liquidity providers directly, it allows you to approximate the preferred reserve curve while still being efficiently aggregated with the rest of the pool. So we saw in AMMs, effectively, you just get aggregated with the rest of the pool and you're fully exposed to any impermanent loss that takes place between the two different pairs of token A and B. In this example, though, you are effectively able to set your own kind of curve while still having the benefit of being aggregated within the pool. It helps decrease your impermanent losses as well as set targeted levels of risk. How this works is the limited range means you earn fees if the market price is within your selected range. This will become very apparent when I show you a screenshot of what the new interface looks like in just a second from a video that SaucerSwap launched on YouTube. In this new system, the key to optimizing returns is that liquidity providers will need to update their price ranges according to the price changes in a volatile market. You can, of course, change the price at any given time that you think you should. Liquidity concentration helps to increase the pool's capital efficiency, and high liquidity is a premise to develop more financial products in areas such as derivatives, perpetuals, and options. That's not really relevant at the moment for us, but of course, it's a potential for the future of SaucerSwap, depending on how successful this particularly is. The bit to highlight here, though, effectively, is you're going to be earning fees if the market price is within your selected range. Now, the wider you set that selected range, of course, the higher your risk is, because your fluctuation between the prices of the two different tokens from where you have effectively entered the pool has a much greater variance. However, of course, you're still within that zone for a longer period of time because the range is wider, therefore you're continually earning fees, but the risk of impermanent loss is higher. Of course, you can decide to narrow that range as much as you possibly can within the effective order book itself, but then you have less chance of earning fees consistently if you see violent swings. However, you're slightly more protected from that impermanent loss. I'm going to jump over quickly to the SaucerSwap video to show you guys what I'm talking about. Here we can see a glimpse from the most recent tutorial that SaucerSwap have released on their YouTube channel. As I said, I'll leave this link down in the description. One of the key things we can immediately see, though, is there is a lot more going on in this particular interface. We can see a meshing now of the liquidity pools or farms themselves alongside the stats that we were seeing previously in the dedicated statistics page that they had separate. So that's really nice to see those amalgamated together. And of course, as well, we can see breakdowns between SaucerSwap V1 available pools, SaucerSwap V2 pools. Of course, those are toggleable filters at the top. Again, don't worry too much. I'll do a dedicated video once I have access to this via the testnet. Of course, everyone will on the 28th. The bit that I really wanted to focus on, though, as we can see, they effectively go through and click on a particular pool. Here it is, the HBAR and source pool. So once they enter into this particular pool, you can see this new style of depth chart that we can effectively see. The white line denoting the current price itself. And of course, we've got ranges out to the extremes of different prices that we could potentially see. If I scrub forward into the future, we can see when they begin to then provide that particular liquidity to that pool, they have the option to effectively set the different prices for those or positions for those two different tokens that we saw. And as we can see there, depending on the size of that particular range, will effectively depict as to whether you're earning fees. The wider the range, as you can see here, quite a large range, means you are going to be earning fees across a larger fluctuation of those two token prices. However, of course, you're then susceptible to much wider ranges of impermanent loss. Conversely, you could obviously narrow that range to closer towards the white line, which is the current price range. Of course, within that narrower band, you'll still be earning those fees, but you're then less exposed to impermanent loss. And you can hopefully visually see there, of course, the larger range I've got, it gives me more fluctuation under which I can earn fees. If I narrow or shrink that range, I've got a much tighter band in which I can earn fees, but it protects me from some of that downside. So you can see here, you can effectively drag these handles directly yourselves, but also they have some predefined volatility strategies to keep things simple for people new to this and to build an understanding effectively of what you guys are doing. You've got focused, balanced, and relaxed strategies. So I think in this example, they choose the balanced strategy and watch what happens to the depth chart handles on the right-hand side. They've clicked the balanced strategy there, and as you can see, it's pulled those handles right in up against that white current price line, showing you that you're in a balanced strategy. You're going to take a healthy amount of, or a medium amount of risk, a balanced amount of risk for a balanced return. And of course, previously, I'd say this was a very aggressive strategy of where you had the handles really wide, of course, being way more aggressive in that you want a higher return, but you're willing to take more risk of impermanent loss. Of course, then at the bottom, you can see you can effectively mint those tokens and you can update your position at any given time by increasing, decreasing, or harvesting your different rewards. So hopefully that gives you guys a bit more of an understanding of what a CLMM really is. And of course, the main advantage is giving you the ability to customize your volatility strategy, whereas previously you were effectively just at the mercy of whatever the markets were doing in that particular aggregated pool, and you had no say over the amount of risk that you were effectively taking in the liquidity farm that you were occupying. Hopefully you guys have learned a little bit more from this particular video on what a CLMM really is and what it offers you going forward under SaucerSwap V2. Of course, as I said, Watch out, because over the coming days, I will have a dedicated video showing you guys how to actually use this interface on SaucerSwap Labs when it goes live on the testnet. To make sure you don't miss out on that particular video, subscribe, and of course, make sure you've got notifications turned on. I've seen a lot of people saying they aren't getting notified of when I'm publishing new videos. If you guys have any questions, feel free to drop something down in the comments. I do respond to as many of them as I can. And until the next one, cheers.